Hey everyone, welcome to November. It's actually just about Remembrance Day, and I figured I better get this video out before the long weekend so that we can all celebrate Remembrance Day, which is a really important time of the year to recognize the freedoms that we all enjoy, and I love this time of year to remember that. Just a little side note, to digress for a second, I am Dutch, and so my family was greatly affected by the Second World War, and it's just something that is very close to my heart. So I hope all of you take some time out this Remembrance Day and think of the fallen that have definitely contributed to our freedom that we so enjoy living in. That being said, let's talk real estate. It's now it's that time of the month. You can see by looking at the screen, I have my website put up here. I did this for a reason to start off with, because just in case you're seeing this video for the first time and you want to have a really good website with really good information on what the market is doing and what houses are selling for. You notice it's a really simple site. I made it so easy. You can look at the quadrants around Calgary up here. You can actually take the towns if you're interested outside the city. I've got the most popular counties around Calgary, and you can search by price ranges. I've made it so simple, and I have all kinds of community information for every listing. So I would invite you definitely to use this site. All right, let's dive into what's going on in the market. So let's get to that right now. All right, so this chart, it's got a lot of data on here. I'm just going to break some of it down for us. You'll notice in October of 2022, we did 1,855 sales on our MLS for the Calgary and surrounding areas. This past month, we did 2,171 sales. So we're up 17.4%. And some of you might be saying, well, why did that happen? And it's really simple. If you remember a year ago, everybody was nervous that interest rates were going to bring down prices. So a whole bunch of buyers were sitting on their hands wondering what to do, and they waited until the spring. And when they discovered that prices weren't dropping, in fact, they went the opposite direction, that's when a whole bunch of people started getting into the market. You'll notice in 22, the Calgary MLS up until the end of October sold 26,817 properties. We're at 24,276. So year to date, we are still down 9.48%. But by the way it's going, if we have a strong November and December, we might finish out approximately the same volume of sales as we did in 22, which, by the way, was one of the strongest years we've ever seen in Calgary. What's really interesting about that is look at the new listing inventory. So last year we had 2,169 new listings. This past month we had 2,684. So we did have a increase of 23% listings in October. However, our overall inventory last year was 3,888 and we're at 3,190. So we're still down overall 17.95% in inventory. So higher demand, lower inventory. And of course that looks, with this picture is a 1.47 month supply of inventory. So that does not give us enough inventory to really meet the demand. And it's no wonder it shows up right here in our sales to list price, which is 100%. So you can see if you're a buyer, especially in the lower priced real estate where the highest demand is, it's really hard to either not be in a multiple offer situation, or it's very difficult to get the seller to negotiate on the price because they don't have to because of the demand. Our benchmark price for Calgary finished at 571,600. Now that's for everything, including condos. So you can see the overall market is up 9.67% in price. Our median finished at 495. Just in case you don't know what a benchmark price is, that's your typical property in Calgary in all categories. The median price just simply takes into account the lower price houses versus the higher price houses that have sold. And then the average, of course, just takes the entire market and averages it out. it's not ever a good idea to look at the average price, because if you get a lot of high-end listings that sell, it brings up the averages too quickly. The benchmark price is the best way of looking at the numbers. But bottom line is that we have a really strong market, and it's driven by demand and low supply. So this chart right here, I love looking at it. The blue shows you the months of supply of real estate. And this is when you can see, if we go all the way back to 2008, we're sitting just, both in early 22, we had a really low supply, got a little better in late 22. Then, of course, this entire year of 2023, we've had a low supply. So, we have a little bit more than we did have in the mid part of the year. But as you can see, by going back all the way to 2008, these are really, really low numbers. This is not a typical year. We should be seeing a lot more inventory, especially for, a city of 1.4 million people, not even including the surrounding towns. So you can see the green is the trend, and that's the trend of low inventory, where the red, of course, is the benchmark price change. So it's a pretty easy chart to understand. When the green goes down, which is low inventory, the red goes up, because there you go, simple supply and demand equation. You don't have to go to school too long to figure that out. Okay, I'm going to introduce you to another chart that I've never shown before, but this is the housing price index. And there's a lot of numbers on here, and I'm not going to go through every single number, but I think it's important for you, if you're watching this video, to understand there's so many different ways of understanding the market, and there's so many different ways of understanding which areas of the city have the highest returns. Because if you are an investor and you're looking for rate of return, some of you may be looking just to find the right property because it's more family focused and you want to just be in the right neighborhood and area and so on, just because it's your lifestyle. But it's always good to look at ROI. After all, real estate is our largest investment that we make. So way back in 2005, the Calgary Real Estate Board started to analyze the housing price index, and they started everything in January at 100. And so you can see for the city of Calgary, which I highlighted here, there's our benchmark price of 571. And you can see since they started in 2005, that means prices in Calgary have gone up 165.9% overall. And then, of course, we can look at the trends as to what it's done in the last month, the last 3 months, the last 6 months, and the last year. And then we can even look at the last 3 years, 5 years, and 10 years. So you can see that real estate is just always a good sound investment. And what's interesting even about the 10 years, don't forget, Calgary actually went through a correction period. I mean, other markets in Canada were doing really well from 2016 to 2020, where Calgary was not. This is why Alberta does not follow the trend of the rest of the Canadian market. Alberta is very, very different. That's why we're doing extremely well and other parts of Canada right now are not. But even through a difficult market from 2016 to 2020, you still, on average, would have received a 32.35% return on your money. And that's what makes real estate such a good investment. Over time, real estate always does well. And what I love about the housing price index is you can see, we can also look at the different quadrants of the city. And you can see there we are at 601,000 for city center. And you can also see that, that didn't do quite as well as the entire city at 236. Although in the last month, it's actually done better. But in the last 10 years, you can see 17.9. Whereas on the east side of the city, you've received an increase of 48.53%, and so on and so forth, all the way down. And the cool thing about the housing price index, this breaks down to literally every community in Calgary. And we can look at these very carefully. So if you are an investor and you really want to study these numbers, you just have to reach out to me, and I can go through some of this stuff with you and give you access to some of this data. I know I've used it myself on investment properties that I bought, and it's been really helpful to be sure that I'm getting into the right community. But even if you are not just an investor and you're buying property, again, for family and lifestyle, It's still really good to be aware of this and understand what you're buying and what you can expect to get as a rate of return. So these charts are just really helpful overall. All right, let's do a little deeper dive into what happened in the detached housing market for the month of October. And you can see that we had a listing absorption rate for the city of 61.62%. So you can see that's falling just a little bit, fairly normal for this time of year. I mean, it's a well-known fact that there are less buyers that want to buy in the colder months of the year, just primarily because most buyers prefer to move when it is a little bit warmer outside. But that's still a really strong market, 61.62. I mean, that's you can see we consider that to be a seller's market. But keep in mind, if you're a seller, that still means that almost 40% of the listings that were listed last month didn't sell. And if your house didn't sell and you were on the market, you really do have to look at some of the reasons why. Was it the price? Was it the marketing? Was it the condition of the home? There's got to be something that's causing it not to sell, because the demand is there. You cannot blame it on the market. It's not the market. There's got to be something with your listing, and you need to take a look at that or even reach out to me for some advice. Our benchmark price, as you can see, for single family hit 697,600. So that's up 0.22% from the previous month, and we're up 11.81% year over year from October. That's a really, really strong market. And here's the hard numbers. That was 976 out of 1,584 that sold, averaging 27 days on the market. Now let's look at market distribution. I love this chart. And as I predicted last month, but here we are, amazing that the 600 to 700,000 is just about to take over the number one spot of the most amount of homes sold in this price range in detached. So you can see that that's where we're headed. And there's no doubt about it, if this supply and demand ratio continues, and there's every reason to believe that it will, this will be the number one spot. And that will be the highest demand price point, is the $600,000 to $700,000 range. And this $500,000 to $600,000 range, especially if you've been a buyer, you know that this is a little harder now to find really good properties that are under $600,000. Fortunately, at this moment, they are still out there and you can find them. But I'll tell you, we've had some really good success because of the low inventory of finding homes that are not on the market. We actually have a whole system for that. These are unlisted homes. No one knows about them. And you can reach out to me and I can give you the details as to how you can get your hands on some of these homes. We've had to get very creative just because of the lack of inventory to help our buyers find these houses, especially in this price point. You know, this is the highest demand. I mean, look at it. It's almost 50% of the entire market is that 500 to 700,000. I mean, we get a lot of people that are trying to buy something in that price range, and we really had to get creative at trying to find more of those properties, and we've been able to do it. So just go ahead and reach out if you've got questions around that, and I'll tell you how this works. There's no cost to be on this program or anything. We'll just explain how it works. Anyway, 700 to 800,000. Interestingly enough, look where that is at the 15% mark, which is of course overtaken the 400 to 500,000, which is starting to go by the way of the dinosaur. And what continues to be strong is this million to $1.5 million, almost 7% of the market. And I'm continued to be amazed at how many people buy in that price point, and they do not need mortgage financing at all. All right, so here's the semi-detached market, 62.81%. So pretty much the same situation as the detached houses. And to my surprise, I mean, it's just, look at these numbers. It's incredible. 628.7. I mean, this is catching up to the detached benchmark price, which is really incredible. I mean, this market went up 1.19% just month over month, and a whopping 12.53% from October 22. And if you look at these hard numbers, that was 179 out of 285 sold. That's a really strong market and not a lot of inventory to choose from, averaging 25 days on the market. But you can see exactly every month. It's interesting as we look at this, the demand in that $500,000 to $600,000 range is still the highest, but this is obviously creeping into the 6 to 700. At this moment, it drops off a cliff right here, but people are looking for those affordable properties, and in this case, 400 to 600,000. So these semi-detached properties don't have condo fees, and that's why people really want to go after them. And they make fantastic investment properties. You can get great rent for them. And it's the same thing. We've had to get very creative at trying to find these off-market listings and get our buyers into them because there's such a high demand for them. But what's bringing up the prices here is over here. I mean, look at the infill market, right? The 700 to 800, that's 9.7%. 800 to 900, 10%. I mean, even this market, attached properties, is 4% of the market, $1 million to $1.5 million. That's really incredible. So it just goes to show we have a really high demand for people that want these inner city properties. These are luxury, beautiful semi-detached, but equally important is a whole bunch of these lower priced, nice attached properties that are almost as good as having a detached home. Okay, now we're looking at the townhouses, row houses, and this is just the same story month after month after month. I mean, they're just all selling. They're just, anything that is a good townhouse is just gone. Our benchmark price now is up 1.38% from September. That's, I mean, it's averaging over, a point to a point and a half per month is incredible. I mean, look at the year over year, 17.78% increase in pricing year over year. That's really incredible to see that our benchmark price is at 425. As I've often said, it wasn't that long ago, people weren't even looking at these. Before COVID, we had trouble even selling them. We had townhouses you could buy. We were listing them for 250, 275, and they weren't even being looked at. And now it's the highest demand. I mean, just, really, really hard to get our hands on these things. 23 days on average to be sold. But remember, that's not even an accurate depiction of that, because usually there's conditions on these offers, and the conditions are anywhere from 10 to 14 days. So when we average the days on market, that actually includes condition days. So really, if you take out the 10 to 14 days, that's that's less than a week on the market. And you can see right here, that's where the demand is. Most of it is $300,000 to $500,000, and there's no question with the interest rates, this is really affordable for most people. It makes really a lot of sense for people that are investing and they want to get their hands on these. So we've also, again, had to use our creative methods to look after or trying to find these off-market, unlisted properties to sellers that haven't quite listed yet. And we've been able to locate them with some of our creative marketing that we're doing and our connections that we have in our big database. So definitely reach out to me if you're looking to find a townhouse, and let us know where you want to be, what part of the city you're looking in, what price range you're trying to find it in. And our ability to find these unlisted properties could be a real asset for you, especially in this kind of market, because right now in the MLS, even if you do find one, chances are it's going to sell within 1 or 2 days, and it probably is going to sell with multiple offers. So it makes it tough to find these on the MLS. You can still do it, and there's still ways that we actually do it that are a little bit creative as well. But it's just a little bit difficult, is all I'm saying, when you have that much demand. All right, last but definitely not least is the apartment condos, and wow, 67.62% absorption rate. Seller's market for apartment condos continues. Our benchmark price now hit $316,600, which is an all-time high for Calgary. It went up about 1.21% month over month, a whopping 14% year over year from October. Really unprecedented for Calgary for these condos. 641 out of 948 sold at such a strong month. 29 days on the market average, and here we are with our market distribution. Of course, the bulk of these is that $200,000 to $300,000 range at 47%. We just have a tremendous demand of people that want to get into the market and they want to own a piece of real estate. With the interest rates of today, especially the first-time buyers, this becomes very, very affordable to get into the market. So we've got such a high demand. The good news is at least there's still a pretty decent choice. We have a little bit more inventory on the apartment market, more than we do in the detached market. So that gives a little bit more choice for the buyers in this area. But you can see it does drop off a cliff. 27% of the market is 300 to 400,000, and we still don't have much of a market after 400,000 for condos. So, but they do make, again, really good investment properties too. If you're an investor, we've seen investors come here from Toronto and buy 2, 3, 4, 5 condos all at once and start renting them out. So this is a really good opportunity to do that. I'm getting a lot of people right now that are asking me, what do I think the market's going to do next year? And for what it's worth, I mean, I'll give you my what I think is going to happen, even though, look, none of us, and I mean none of us, including me especially, have a crystal ball and can't predict things. But there's already talk about interest rates coming down. And that's really probably exciting on one level for some people, and to me, but very scary on another. Look at how strong our market is, even with the higher interest rates. Can you imagine if the lower rates do happen, what that is going to do for an already strong market in Alberta? So, you know, the prognosis really is that this demand is not going to slow down anytime soon. And if rates come down a little bit, or even if they just stay where they are, it certainly looks like we could see a very, very strong year for next year. And I would say if you're a buyer, this would be a great opportunity to get into the market right now. If you're a seller, probably the only fear that could be upon us is if the whole entire Canadian economy goes into a recession. You know, that could impact Alberta. Oil prices could drop. Who knows what would happen with these wars that are going on, but if they ended and oil prices do drop again, that always can impact real estate quickly. So you always have to be looking over your shoulder when you're a seller. If something, you know, that can come up quickly and impact your ability to sell, and all of a sudden inventory could rise. And the other thing that we're looking over our shoulder is there are a number of people that are going to be having to renew their mortgage at higher rates coming up next year. And we don't know how many of these people are going to have trouble paying for these mortgages. So there are some people that are concerned that these people are going to start putting their houses on the market. And then, of course, there's a question as to how much demand is there to meet the number of people who may put their house on the market if they can't afford the mortgage payments. I don't personally think that's going to be too much of a concern. But again, I don't have the crystal ball, and I like to bring up these issues just to have them in the back of your mind. But if you are thinking of selling, you know, I think the thing is, if you're selling and buying in the same market, it's not going to matter too much. If you're selling just to get out of the market, you can play the safe way and just do it now and take advantage of the market, or gamble a little bit, maybe wait till spring, see how this market will continue to grow. You might find yourself getting a little bit more money in the spring, but always remember that things can change quickly for the better, and they can always change for the worse. And you got to keep that in the back of your mind when you're making your decisions. So as always, give me a call if you've got questions about the market. You want to get some advice on what your home is worth and what area you're in. We have offered our new guaranteed sale program. It's a fantastic program. You don't never have to worry about owning 2 houses. If you're looking at a market like right now where you want to sell and you don't want to be in a position where you might own 2 houses, or having the ability to find your other house first before you sell, it takes great comfort to know that you can go out, find the house you want, make an offer, and know that you have a guaranteed sale on your house so that you can make a strong offer on the one you're buying. All you have to do is reach out to me for any of those questions. Send me an email, send me a text, send me a Facebook Messenger, whatever your way of comfortable for reaching out. And again, have yourself a fantastic weekend. And remember and stay.